Hello, it's John Piper with the weekend video, and it's Saturday the 14th of September. Looking at silver first, mainly because the wave pattern is clearer than gold. It's basically got this from the low we saw back in November, a clear 5-wave 1 move, then a 2, and now 5 waves up for what I'm calling a 1 of 3. So this is just the first, in my scenario, this is the first part of 3. Now got the wave 2 upon us, which is quite sharp. It does open the possibility that we've actually seen an important peak in silver. I don't believe this is the case. I think both cryptos and precious metals have got a long way further to go up. With crypto, we've got a clear case because cryptos are getting established. You know, they're proving themselves, and that should attract a lot of buying as is happening. It got a bit over exuberant, so we had the correction we're experiencing at the moment. Gold and silver got established thousands of years ago, so that particular point doesn't apply to them. And also it's true that cryptos are far more easily transferred. You're going to cross a border from a country like Venezuela or somewhere, where the government's desperate to try and grab whatever it can. You know, carrying kilos of gold with you may not be a very successful strategy, but buying crypto, transferring electronically to wherever you want, is obviously far more convenient. I mean, okay, there are plus and minuses to all these things, but certainly if you want to get money from one place to another place, then cryptos are far more efficient. Anyway, let's have a look at this this pullback. First, have a quick look at the Fibonacci levels. 50% is around the $17 level. I think that's probably going to break actually, because even if it's an A, B, and C, it's more likely to get down to 1640, which is the 61.8% level. That'd be quite a sharp, aggressive correction. If it goes much below that, it's hard to get a bit more concerned about it, but I think down to 1640 is not going to be anything too worrying. Looking at the correction itself, I mean, it is pretty impulsive. There could be a third wave there. So you know, it's not impossible this is bigger than I think it is, but as I say, it's only if it goes below that 1640 I would become more concerned. And for now I'm treating this as a correction. The pattern on gold is a bit more complicated. I'm treating this as a big 2, so where silver's seeing its big 2, gold has seen it already. This may need to revise, but we then got 5 waves up to there, followed by either an A, B, C, A wave, or the peak's actually here. This is the higher peak. Sorry, that's the higher peak. This could be the wave A, followed by the wave B, and now we've got a subsequent C coming in. 50% is 1470, 38.2. around 1450, and I think those are the key levels for this move. If this count is correct, then it shouldn't be too long lived. This should be over in a week or two. Silver would allow for a slightly longer term move there. Meanwhile, Bitcoin remains in the triangle. We have the ABCA, ABCB, the ABCC. Now this could be an A, B, C, D, followed by an ABCD to finish it off. So a few more weeks if possible. If you actually look at the wave pattern of these, what I'm calling D at the moment, you see it is potentially impulsive. We have a 1, 2, 3, 4, 5 as the third wave, so then we got 4 and 5, 1 and 2 down here, followed by an ABC correction. So it's not totally impossible that this is actually already over, and that we could be seeing new impulsive actions, a possible 5 here as well. It's all a little bit dithery. I mean, this is not hardly startling stuff. In any case, we are due to go up to the upper trend line above 11,000 to complete the D wave, but it's not impossible. This is actually more important than I'm thinking at the moment. So it may be worth buying some Bitcoin that the opportunity presents itself. As I say, we would like to go to the upper parameter of the triangle in any case. We just expand. Right, so even if it's a correction, we could still see it get up to around the 11,000 level, as I said, as to complete that D wave. And if it's actually new impulsive action, then of course we can go a lot higher than that. I think 20,000. This rally will take us about 20,000 once it starts. And there are various other forecasts around and about, well in excess of that level. This solid pullback, which I thought was impulsive. It certainly looked impulsive. My cursor gone. Okay. Counting in a 1, but then we had the 2 to there, which was a very clear channel move. But instead, things are shooting up further, and is now threatening to make new highs. It's got so close now, and normally having got so close, markets do have this magnetic pull. So I think we'll like to see new highs, unless we see some obvious sell signal coming in. Alright, same goes to the DAX. We had the 5 waves down, but this rally is negating that signal. And again, a very strong movement. Again, it could reverse, but again, it's got pretty close to that level. So, well, we'll have to wait to see what happens. But I would think that the most likely course is for new highs here for this move. Anyway, I don't mean all-time highs, but highs above the peaks here around 12,656. The only market that's not doing this is FTSE, which is still stuck with a fairly feeble bounce. So we've got the 5 waves down, followed by an A, B, C. I mean, it is staggering higher, but only just got the 50% level here, 73, 75. So not looking too good really at this point. And we have got the political issues, obviously, which continue to dog the situation, which one day they may get resolved, rather like the Bitcoin triangle, I guess. Anyway, on that note, I'll call it a day. If you found that interesting and useful, back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.